Your Excellencies, distinguished guests, welcome. Now, we are hosting, as Chavan said, an entire session on India reflects the interest in a country that is racing towards reclaiming its mantle as the world's fastest growing economy, and that too right here on the Gulf's doorstep. Even so, some of the biggest debates in India today revolve around bad debt, consumption, the fight against corruption, and the need to create jobs. We are going to reflect a little bit on how these things are shaping the investment environment in India. But first, let me introduce my panel. I've told them that they have to work very hard, especially as the following session is devoted entirely to China, our friendly neighbor. First, let me introduce Vikram Mansharamani, an investor and lecturer at Harvard University, who knows a thing or two about financial booms and busts. It's a great pleasure to welcome Arundhati Bhattacharya, until recently the chairwoman of State Bank of India, the country's largest lender. And finally, but certainly not least, B.V. Krishan, CEO of KKR Indian Financial Services, which is specializing in the demand for alternative credit products in the country. Thank you for joining us. Now, there have been a lot of disruptions, reforms, call them what you will, in the Indian economy. Under the current administration, we've had the demonetization exercise, we've had the rollout of a new nationwide tax, and that's all taken its toll on growth. But looking beyond 1 or 2 quarters, are we on track to deliver the higher levels of growth that can really make a difference? And Arundhati, I'd love to start with you.
Okay. So I think, we'll look at 3 things because of which I feel that, we will get the growth that we need. The first and foremost is the demographics that we have. So a nation of 1.3 billion people, 26.5 median age. So a lot of people who are at the beginning of the economic life cycle. The second thing that I think that we need to look at is the macro parameters. Most of the macros today are more or less in control and in a position where you can begin to look at growth in a very serious way. The third thing that I think that we need to think about are the big reforms that have happened and which probably in the short term have actually reduced growth. So we can look at things like the Bankruptcy Code, again, something that's very, very important to give confidence to the market. The secondly, you have had demonetization plus the GST. Now, these 2 things put together have actually launched a formalization drive in Indian industry, which was never seen earlier. And one good impact of that, if you've seen the budget documents this time, it clearly lays out the fact that today, tax to GDP is the highest that India has ever had. The number of registration of taxpayers is, again, the largest that we have ever seen in the history. And therefore, there is definitely a move towards formalization. So I think these are 3 basic underpinnings that I believe give us the right kind of momentum to see growth coming in, maybe a quarter or 2 down the line.
So how bullish are you? I mean, China's had 10% growth. I mean, is that something India will be able to notch up?
Well, 10% seems a little bit of an outlier immediately from where I stand, but definitely, going towards 8% is something that I would see in about 2 years' time, and that's definitely something I believe that will happen.
Yeah, so from my perspective, and I agree with Arundhati that fundamentally the economy has the potential, the demographics are very supportive. But if you step back and see what is the quality of growth that we have in the economy on the one side, and think about core structural issues for the economy, there's still a long way to go. So for example, if you think of the supply side factors and constraints in the country, they're substantial. So every percentage point of growth is going to be inflationary. So how do you minimize that? Which means how do you have policies that encourage investment in the supply side, which are on time in the right areas, and how do you encourage both local investors as well as foreign investors to back that? I think supply side is a big problem. Second issue is if you think of the growth over the past 7 years, you've had approximately 6 to 8 years bid offer where you've had lack of private investing, you've had lack of credit growth. And the last time that we really saw significant consumer demand was in 2010 when you had subsidy-led consumption growth. during the previous government. And now what you're probably seeing is leading up to the elections, again, there's going to be a bunch of subsidies going in some shape or form to the consumer to enable them to spend. And absent these two elements of subsidy, if you pull them back for a moment and think of whether India would have consumed as much, it's questionable. So therefore, the question is, how do you encourage consumer demand fundamentally? Well, there are a lot of people. How do you step up their levels of consumption? So that's a second core problem. A third issue is that thanks to a lot of the more recent introductions, whether it's Bankruptcy Code, GST, and so on, which are structurally good outcomes, when you think of business confidence, and confidence among local entrepreneurs to set up the next new power plant, next new steel plant, and so on and so forth, is just not there.
Well, this is the problem. There is really no private investment happening in the country at the moment, or certainly at nowhere near the sort of double-digit sort of credit growth that sort of fueled a few years ago. And a recovery in credit growth is really key to everything. So how close are we to seeing that? What's your view?
So at least from our perspective, if you anecdotally look at it, in the last 12 months, in 2017, as a firm, KKR has invested $2 billion in India. And if you think of how much of that capital actually went towards creation of new assets on the ground, it's probably about 10 to 15% of that total. So it's a minuscule portion of our investing amount. The rest has been refinancings, taking someone's investment out, and so on and so forth, which are good ways to invest fundamentally, but you're still not seeing sufficient investment on the ground. And I think, therefore, to your point, when you think of what needs to happen to encourage people to invest, first issue is it's a highly levered corporate world in the country. It's a highly levered banking world in the country, adjusted for the NPLs and lack of capital. So there's basically, so that nobody wants to lend and nobody wants to borrow. So then who's going to invest and who's going to risk take is the question, right? The starting point still has to be consumers have to start spending money substantially, utilize existing capacities, get more confidence building coming back, and then encourage through policy frameworks which get people to say that, look, even if you come in with risk capital of a certain amount, we will encourage you, give you the ability to build the next new plant in the next 24 months, and this is the 5 things that need to get done. But unless you give that structural clarity, getting people to come back with a lot of risk capital is going to be a struggle.
And we've also done a very good job of demonizing the people who have defaulted on loans, becoming a large private investor in the country very difficult. I mean, Vikram, can I ask you, from your position, how strong do you think the Indian consumer is? I mean, India is a consumption-driven market, after all.
Well, one hopes so. I mean, I think the title of this session is Incredible India, and I would say there's been an incredible marketing job done to sell people on the India story. And the reason is, I would actually use some of the same issues that my esteemed panelists have used to highlight as India having wonderful growth prospects. I would flip it on its head and say these are no longer tailwinds, they may in fact be headwinds. So demographics, a wonderful story, right? India's having lots of people. Well, that is demanding roughly 1 million new jobs to be created regularly. A month, I think, is the number, entering the labor pool. Now, that is a wonderful story if there are opportunities. And so I don't think those exist. I think the whole Make in India campaign, which we can talk about some more perhaps during the course of this panel, I think that's been a complete failure. I'll say it bluntly. I think they have not been creating the jobs. The manufacturing may in fact you may attract manufacturing to India, but that manufacturing is being done with automation and other robotics, and in fact producing fewer jobs than had been hoped. And so I think that's not producing the consumer class. The real question is, fundamentally, will we get a middle class in India? And I think that the development model India is pursuing, which is, driven by Make in India and some other programs, I think is the wrong model. It happens to be a love affair with the Chinese model. What the Chinese model worked. It was earlier. It was 20 to 30 years earlier. And so therefore, they were at a different stage. There weren't the robotics. There wasn't the automation. They were able to educate people, bring them into the factories, add value, have productivity. That is not happening in India.
And they were the ones that ultimately went and spent money. Actually, I'm glad you raised... Well, actually, so please.
I'd just like to respond to one or two of the things that were said. especially, where is the consumer and how do you bring in the investment? See, one of the reasons why private investment hasn't come, beside the fact, of course, that there are a bunch of people that are very highly levered, is also because of the fact that the capacity that was put up during the period of 2008 to 11, that really had not got utilized. Now, if you don't have utilization of capacity that's already on the ground, you're not going to see new investment coming in. And now, why has the capacity not been used? So there were two parts of it. One, of course, is that where are the consumers? Where is the demand? And the other part of it, of course, is the structural reforms that need to be, put in place to ensure that the capacity gets used. I think on both of these two fronts, this government at least has moved quite hugely. One area that we have seen repeatedly in India is that the demand is something that rolls up from the bottom. Very few things in India come from the top. It's always something that, the people at large, they themselves empower themselves in order to get where they need to get. Now, if you are looking at that, 50% of Indians are still on the land. And therefore, the agricultural piece, which has, I don't think, been given the kind of importance that it needed to be given in order to ensure that they have the disposable surplus, that attention is now being given in very many ways. I was just describing a little while earlier how this government, at least, is trying to ensure that the people on the land, they get adequate for the kind of produce that they're bringing to the market.
And they will eventually be the consumers.
They will be the consumers.
Which is actually, which highlights a very big.
No, but
which highlights a very big disconnect in India that we have today. We have quite tepid growth, but we have a stock market that is really has been booming. And in that stock market, we have consumption companies, selling things like shampoo, trading on astronomical valuations like 60 times PE. So my question, shifting the debate slightly, is has this overrun? I mean, it feels a bit precarious. You have foreigners are selling shares, but domestic money is piling in. So how worried should we be?
Very.
No, I think, you have to understand that the Indian market is undergoing a basic change. For instance, the Indian market was always driven by foreign money. Okay? Today, the Indian market is no longer being driven by foreign money. The reason for that is, again, the youth of India. In the sense that, you have a much more younger lot of people who are earning, who have the investable funds. They realize that the banks are not going to give them very good returns. Again, the banks themselves are trying to reduce the deposit rates so that the lending rates also can be less. And the fact that this particular class of people have a better risk appetite. So they are more interested in getting into the market. Plus, in the typical way of Indian innovation, you have a product which is called a systematic investment plan, which is actually getting a lot of money. What happens there is you give a mandate for small amounts of investment every month. So that's a lot of money funneling into the market.
And that should grow over time. BK.
Yeah, so the way I'd look at it is irrespective of whether it's the Indian investor, the foreign investor, and I think the fact remains that it is an expensive market. There's no taking away from it. And clearly the fact is it's been driven by liquidity, global liquidity, local liquidity, and so on and so forth. That's an issue. But what we do think is relevant to talk about is it's not just about public equity markets and broader indices. There are multiple ways to invest in India. Obviously, you could do alternative credit, you could do private equity, which over time, in the last few years, has now become more of a buyout control market, slowly emerging, which is very interesting relative to earlier growth equity trades. Obviously, there's a emerging latent opportunity for a distressed market. It's still too early, but hopefully that'll come up. So there are ways to invest in India for sure, which are attractive. Having said which, the public markets are expensive. It is what it is.
So I would like to talk about, we all know that a strong banking system is a prerequisite for growth.
Right.
I mean, do you think India has got a grip of the size of the problem of bad debt in the country? And has it committed enough money to fix the problem? I'd like to start. No, I would like to start with you.
Sure. So again, you could cut the pie in multiple ways, right? Obviously, the headline number is India is $1 trillion plus banking assets market. And the reported NPLs are $140 billion, let's say. So it's about 14%, so to speak. But if you, again, cut the pie, irrespective of whether the numbers are slightly larger or slightly smaller, and look at only the corporate balance sheet of banks, keep out the retail balance sheets from the denominator, then the effective corporate NPLs are in excess of 25%. So 1 in every 4 loan by value is non-performing or restructured, and so on and so forth, which is a significant number in any country. Now, the question really is, what does that mean in terms of the banking industry? Yes, some of it is very heavily concentrated. This 24, 25% maybe with not too many groups, but which is a different matter. But there is an acute shortfall of capital for sure. There's no question. Second piece of it is structurally, you're in a market where there is no real corporate bond market. You've got, in the last 2 years, people anecdotally say, look, the bond markets are coming back. A lot of people are issuing paper, but that's still your Reliances and the Tatas and the high grades that are issuing. So you don't have a bond market structurally because the government is preempting personal savings back to fund its fisc. And on the other side, you have a banking market that's acutely short of capital. So what is the real need in the long run for India is to develop alternative forms of capital, get other people to come in, which is where things like the Bankruptcy Code, ability to predict outcomes, timelines, recovery rates, they all make a substantial difference. But long story short, to your point, I think, do banks have sufficient capital? I don't think so. But at the same time, if someone net new wants to borrow, will he get money today? He probably can. But the question is, does he really want to put up a plant right now?
I mean, one of the things that we've seen this month, it was quite shocking, really. We had a state bank, the second largest state bank, report an almost $2 billion fraud. It was so shocking that actually when we first read the headline, we thought they had made a mistake and that they actually meant rupees and not dollars. Is this, Arundhati, is this a sign that the administration's cleanup of the banks hasn't been working, or how are you viewing this?
Actually, this is a result of an operational risk management failure. And if you consider the fact, that the banks really need to sort of modernize their ways of doing things because of the kind of evolution that we are seeing, both in the risk management and in the technology piece, I think it's an area that really needs quite a bit of attention. So what you really need on these state-run banks is the right kind of people on the boards, especially people who have done and executed risk management plans, who are good in technology, to give the right kind of guidance. I don't think that we have sufficient number of such people on the boards of the banks. You also need to get the right kind of management, and management that has a tenure that enables them to really fix the problems that there could be within the banks. Having said that, I also do think that some of the entities are very small. They are not big enough in order to take on all the risks and the compliance costs and the technology costs.
So you believe in consolidation?
So I think, that is something that we need to consider down the line. Either that or certain functions at least could be shared across the banks so that, you have the right kinds of stuff in place. I am told, again, this is media and I do not know the fact, that one of the problems in this particular bank that had this problem was that their core banking system was under upgradation, which would have enabled them the interface with the messaging system. The version that they had of the core banking was one that didn't enable this. Now, of course, that's no excuse, because when you are doing two types of transactions based on one set of accounts, then there has to be a reconciliation someplace.
But I think
that should have been there.
But I think the question people really are asking at the moment is, was this a one-off, or is this a sign of much deeper rot in the banking system?
No, I don't think it's a sign of a much deeper rot. This particular thing is, I think, a one-off, and normally operational risks are one-offs. It's not something that spreads across, unlike a credit issue and things like that. So it is a one-off. But having said that, that doesn't take away from the fact that we do need to strengthen governance in most of these entities. It simply underlines that that is something that needs to be done.
And do you think it's going to happen?
Well, I would think that it should happen, because at the end of the day, it's the system that suffers if it doesn't happen. So definitely, I do believe that going forward in the longer run, this is something that the government at least will address, because obviously, this is what really needs to be addressed. If you're looking at learnings from a situation like this, that's the first learning that comes about as to how you improve the governance and the management efficiency to ensure that such an incident is not recurring one.
I mean, it's particularly galling that this has happened when it's happened, because people really felt that the cleanup of the banking system was in its stride, and the fact that the fraud was ongoing, well into and well after the administration had sent a strong message about corruption. It makes you doubt the effort. I mean, what should we think about India's broader corruption crackdown?
Well, it's fascinating. The corruption is a major issue in India, and to go back to something that Arundhati started with, things in India work from the bottom up, and that's true with corruption as well. And it exists at almost every level, and so it creates a bureaucratic difficulty to get things done. There's a reason why the World Bank has listed India very low in the rankings when it comes to ease of doing business. It's a difficult place to do business. Permits, quote unquote, the green permits where you have to go pay someone for the permit. So bottlenecks exist bureaucratically at virtually every level of getting a business started, and that makes it inefficient and difficult. And so that kind of corruption is a major inhibitor of growth and progress. And I couldn't agree more with the statements made about governance. I think improvement of governance will help eliminate some of these issues. I'm very encouraged by the fact that they're actually paying attention. I like it when frauds like this come to surface, because that means someone's paying attention and they're trying to clamp down on it. So in a sort of contrarian sense, it's a positive development.
Something where corruption is concerned, I think one of the things that the government is trying to put more and more emphasis on is on the use of technology. For instance, today we have created platforms on which the small business guy can put his bill, and this bill, that's the receivable, it is to be accepted or not accepted within a period of 30 days. And the moment the bill is accepted, it can be auctioned. And because it is now an accepted bill of an industry major, the price at which the auction is, that is the rate of interest, is more towards that than to the SME borrower. So he gets advantage both in the cost of interest as well as in the timeline. And why I'm saying this is important is because this cuts away all of those layers of corruption that could happen otherwise.
The rent-seeking behavior.
The rent-seeking behavior. The fact that, if he's a small supplier, I don't need to pay him until I'm comfortable about paying. The fact that, in order for him to proceed up the ladder, there could be 5 or 6 people who he would have to sort of, buy in order to get his bill to move. So these are the kinds of things, which the government is now really propagating very hard. And why I mention this is because along with the capitalization announcement, this was one of the announcements that the media missed totally, where they have said that all PSUs are mandated to get on this platform.
Public sector banks?
Yes. No, not banks. The industry.
Public sector companies?
Yeah, companies. The public sector enterprises are now mandated to get onto this in 90 days' time. It is part of the budget as well. Now, what happens is when the PSEs get on this, then their cost of getting that particular supply also comes down.
I mean, essentially, the government has used a very big whip to get everybody into a more compliant and less corrupt mindset. But let's not forget that the session is called Incredible India. So, and there is an absolute... there's absolute wall of money looking to come into India and just waiting for the right moment. Banks are usually the best way to play a consumer growth story, but if you don't want to touch them because of the reasons discussed, where do you want to put your money today? And I think, BV, you've probably got some really good views on that.
Sure. So I'd say we broadly have 3 different strategies. Talking of KKR and the broader markets, right? You've got private equity, you've got private credit, and distress. Over the past 8 years, we've invested about $9 billion across these, and a bulk of it, interestingly, for us has gone actually into private credit. It's about $5.5 billion of that, which we believe is a significant opportunity structurally in the long run. As I said, you have, in a way, a broken banking industry. You have no bond market, so somebody has to provide the financing, number one.
And that's an opportunity.
Exactly. And the second part of it is, once you do the financing, what one can always do, adopt international technology in terms of types of lending, types of structuring, tenor of loans. How do you really make sure a loan is suited to a borrower's business cycle, and so on and so forth? So alternative credit as a big basket, we think is a fantastic opportunity. Things like the Bankruptcy Code are great because in the long run, they give you more confidence to lend incrementally into the market. So that's one substantial bucket. Second bucket, when you think about the private equity model is, as I said, over time, India is slowly migrating from what was a growth equity market to selective buyouts. People are divesting businesses. There are generational changes. So the son doesn't want to run the business anymore. So the father wants to sell. So there are control transactions today, which are very interesting. So the deal pipeline, size of deals there have gone up substantially. The third piece, of course, is the distress market, where we still feel that it's too much noise, a lot less to do in practice, because A, banks aren't selling assets at what we believe are the right prices, number one. Number two is that the process dynamic of what is today being done via the Bankruptcy Code and thinking of that as the resolution mechanism, we think is a little flawed. It's a good infrastructure to make sure that you can cleanse a company and take it out, which is fantastic. But like it happens internationally, you need pre-packaged deals and real resolution ideas before you take it in.
Can I ask you about the Bankruptcy Code? I'm glad you brought it up. I think a lot of people in this room who are looking to invest in India really want to understand how confident can we be that this is a insolvency regime, a new insolvency regime that will complete things in a time-bound manner and that isn't full of holes.
Yeah, so my view is that this is a very positive development. In the long run, structurally, it's a fantastic outcome. And again, the backdrop of this was that after Prime Minister Modi came into power in 4 years ago now, at that point in time, he had visited the US, he had met people like our founders. People brought it up to him saying that you cannot develop a bond market in India unless you have a bankruptcy regime, ability to predict recoveries and timelines. And within a record time, they actually passed a fantastic law. They took a lot of inputs from people like us of what's happening in the UK, what's happening in the US, and blended a law which was relevant for India.
Yes, we know the law is good, but
law
will
is
it
fantastic.
stand up? Will it stand up to test?
So now at least, whatever timelines have been given, they are more or less kept. In a few cases where extensions have happened, it's only because the law interacts with some other law. For instance, how does the Competition Commission come in and give his opinion as to whether this is creating a monopoly or not in a short space of time? How does the income tax look at, the haircuts that are being given? So because it has to interact with certain other laws already in place, so there has been a little bit of an overflow of those timelines, but only for that. And not only that, one other very good thing that we have seen is that at the time when we took these accounts into the courts, there were certain challenges in the other high courts. And in all of those, the decisions were given in a very timely manner, and they were very well-reasoned, good judgments. So I think, everybody recognizes that people are looking at this and the implementation of this with a real magnifying glass.
So the pressure is on.
The pressure is very much
on. Also that it's not about whether the process works in 270 days. Let it take 365 days. It's anyway, 270 is pretty short. What people need is predictability of outcome, that it actually works. People are able to decide, the courts are able to rule, which is absolutely in the right direction.
Okay. Of course, we were talking about banks, and one solution to some of the governance problems that many people talk about is privatization. This would be a major step forward for a country that very much still has a socialist mindset. Does this panel see any chance of privatization if the current government secures a second term? And we have a general election in April, but due by April next year.
I don't have a strong opinion on that, I'll be honest.
To tell you the truth, I don't think that privatization is the only answer to all ills. If that had been the case, all of these bankruptcy cases in the NCLT are all private companies. Why are they there?
And we see some very good examples in the UAE
privatization is not the panacea.
Of state companies that can run well.
Yeah, exactly. So I think what needs to be done is not the privatization bit, but where is it that the banks are hurting? And I think the banks are hurting on two fronts. One is getting a good, proper board in and empowering the board. Empowering the board. People keep talking about, are you receiving phone calls from the government? Phone calls from the government, I don't know whether there were that many. I have never received, so I don't know. Okay, but what is not understood is it's not only the phone calls. The government must actually leave the running of the banks to the boards, because each unique bank is different in its cycle of evolution. And one department saying what everybody is to do is not really addressing the various issues that there may be in various banks. So I think, good boards, empowering of the boards. And the second thing I think where there is a big problem is in the HR piece. Today, in the Indian public sector banks, you can only recruit in a particular manner, and you can give your compensation only as per industry standards. So that what it does is it prevents us from getting the right kind of talent at the right point of time, at the right compensation. This is an area that really needs to be looked at. And in fact, the government had put in place a committee headed by a Supreme Court judge to look at this and find out ways and means of getting this done. I think that is something that really needs to be addressed very, very
So maybe
quickly.
not privatization necessarily, but better management. I mean,
Absolutely.
do you see any chance of privatization on the horizon?
Yes, the way I look at it is I don't think the government today believes it's a necessity. And to Arundhati's point, in the past, they've demonstrated that if they believe they need to do something, they've gone ahead and done it. This is probably one of those where they don't think this is the quote-unquote answer. I think unless they agree with that, I don't think it'll happen anytime soon.
Okay, I'm mindful that there's probably a lot of people in this room that will have questions, so I will start to throw it open shortly. Please be ready. But first, a quick word on demographics. India has a very young, fast-growing population. Is that a potential demographic dividend, or is it a ticking time bomb? Modi launched Make in India, a bid to turn the country into a manufacturing hub, because he recognized the urgent need to create jobs. Yep. But in today's world, we have more countries looking inwards, protectionist overtones, and India itself is imposing tariffs. So where does this all leave the idea of Make in India and India's export ambitions?
Yeah, look, I think this is a phenomenally important topic for the future growth trajectory of India. And I think fundamentally, you can make in India, it's just not clear you can take out of India because there's an infrastructure problem. Right, so that's one problem. In fact, I've seen some analysis that says you can take the distance between Guangzhou, China, to Mumbai is roughly 7,300 kilometers. And the distance between Delhi and Mumbai is roughly 1,400 kilometers. And transporting goods from Delhi to Mumbai by truck will cost you the same as transporting goods from Guangzhou to Mumbai by boat. Now that's a problem. That is a problem. You can view it as an opportunity, but it does inhibit the investment in manufacturing. Secondly, I believe the manufacturing sector needs skilled workers because of the increasing automation, robotics, and the sort of improvement in manufacturing capabilities. The farmer, the sort of uneducated rural worker who can come the way it worked in China to the factory and increase productivity and produce lots of great middle-class jobs, that opportunity doesn't exist at the size and scale that India demands. I think Modi said he wanted to create 100 million jobs. That's not going to happen. It's just not going to happen. I'll tell you bluntly. At this point, the math is such, it's not going to happen. Further, growing populations in this world of technology and needs for jobs is a very difficult proposition to face. What economists and other demographers had historically called a demographic dividend, I might suggest to you would be a demographic millstone, a sort of a weight around one's neck. And so I think this is a real problem. And as a result, it may be that India never produces a middle class of any reasonable size.
Okay, but then if not Make in India, then what? Sorry, BV.
So a couple of things, right? One is I think there are obviously, if you go down to specifics, there are interesting examples. So if you take our case, the two most successful investments we've had in India, both have been on a Make in India theme. One is a company called Alliance Tires, which has got a factory that's in south of India, 100% exports company. They do massive off-highway tires between there and Israel and export it. It was a fantastic experience. The second one that we did was a pharma company called Gland Pharmaceuticals. It's a pharmacy business, makes sterile injectables, 100% exports company. There are pockets where I think manufacturing expertise does exist, can be picked up. Obviously, is it at a scale that you would like? I think it's not yet there for the right reasons, as Vikram pointed out. I think the issue therefore comes back to how do you build a scaled Make in India program? So where exactly is it and what do you need to do for it? So two requirements, right? One is especially given the context of this region where there is truly long-term capital. One of the big needs India has is a supply side fixes. So you need long-term patient capital to build a supply side that then can follow through into much better Make in India kind of outcomes. Second piece of it coming to the consumer side and demographics is, I think it is at one level a little overstated because yes, there are a lot of people, but we're not at a place where the disposable income levels are high enough for people to spend a lot. Anecdotally, you think about the largest restaurant chain in India, the largest consumer company in India. The math just doesn't add up when you compare it with, let's say, a China, because it's still much smaller scale.
But how does that connect to jobs?
So it's two pieces, right? Ultimately, when you think about jobs, it goes back to the first piece that you need to have an industry or a makeup of an industry that requires employment. And there are obviously three ways to go about it. Your traditional China way.
Yes.
Second is you build a lot of infrastructure and infrastructure-related jobs. And third is in and around services and related areas. Services can obviously pick up and do their own share, which is kind of the way we are heading. But is it sufficient enough for the size of our population? I don't think so. You still need significant infra investments and probably bits and pieces of manufacturing that is potentially higher end, which we need to build and create over time.
Arundhati, are you pessimistic on the jobs piece?
Yes. I also believe that, there is a demographic dividend, but it's a period of, say, another 2 decades before the dependency ratio changes and that dividend really disappears. So there is no time to be lost. In my mind, at least, I think, every day lost is a opportunity lost. Having said that, I think one thing that is not really understood is the entrepreneurial skills in India. For instance, the same topic that you were talking about the transport, the difficulty of it. There are, for instance, today logistic companies, and I know of one quite well, which actually tries to address this transport issue. One of the reasons for this transport issue were, of course, the interstate taxes. Now, with GST, that is abolished. So today, the truck can go straight through. But it still has a problem because you have these truck drivers who, have to spend days on the road. They hardly get time off. They are not sleeping during the nights because that's the time the trucks are actually running. And their efficiency levels are very, very low. There is this company, what they are trying to do now is have a relay of drivers so that, the truck never stops. There is no stoppage. And to that extent that whereas it would take 12 days, for instance, to go from Faridabad to Delhi, to Mumbai port, today with that kind of a setup, they can actually make it in 5 days.
But the point is we need the urgency.
That's right. But the fact is, there are huge opportunities. It's a question of whether the entrepreneurial skills of our people, combined with the capital that he's talking about, which is absolutely necessary, if these two things can actually be fired together,
and on that note,
job creation will happen.
I would like to open it for questions. So can I just have a show of hands on some mics? Okay, can you take number 3? Please.
A quick question to Arundhati and a comment on the panel. I think everything they said was wrong is absolutely true, and everything they said is right in terms of potential is also absolutely true because it's not a country, it's a continent. But the specific question to Arundhati is with regard to infrastructure. And I know you're on the board of the National Infrastructure Investment Fund, into which ADIA has recently invested $1 billion. That's looking ahead. In terms of logistics, sector, ports, waterway, inland waterway, everything else. How do you see that happening in terms of pace and the quality of execution? I think that's the first question, because that's only as good as how it gets done and how it produces the kind of returns, because ADIA is not a soft loan agency or a soft aid agency. It's a financial investor looking for returns. So where do you see that happening?
Well, I think, the opportunities are humongous, actually. Now, it's a question of execution. We've tried to ensure that this NIIF has the right kind of setup to enable it to have public sector values but private sector execution. As you know, the majority is owned by the private sector, not by the public sector. So to that extent, we've tried to ensure that, the right kind of elements are there to enable them to execute as quickly as possible. Today, for instance, India owns a huge number of roads which can be immediately they can be sort of refinanced and taken out. That's the kind of asset that's going to give you returns over a long period of time, and it's totally safe because these are already built roads. So I think, the opportunities there are quite large. It's a question of actually starting the whole thing off and ensuring that the execution is in line with our expectations.
It feels like there's a bit of a theme emerging that, short term, if you're a long-term, long-horizon investor, then you could have quite a good time in India. Sorry, I'll take another question. Just down here, in the front row, please. Mic 4. No, front row.
Well, thank you to the panel, a very enlightening discussion. My question is to Vikram, actually. We talked about the Indian middle class not being there, but I guess there is some amount of middle class. So what's the size of the Indian middle class? Assuming middle class being defined as basic housing, health, medical, school for the kids, and some vehicle. So what's, in your views, the size of the Indian middle class?
Well, so everyone will disagree on this matter. If you ask 5 economists, you'll get 7 answers. So let's agree, first of all, that there is no strict definition of what a middle class is. But let me give you some data that I scribbled down here. First of all, there's a massive inequality in India, right? We all know that. Massive inequality. And The Economist magazine helped me sort of contextualize it in a way that maybe is helpful for all of you. The top 1% of India is roughly like Hong Kong. The next 9% is roughly like Central Europe in terms of purchasing power. The next 40% of the population is like Pakistan and Bangladesh. And the remaining 50% is like Sub-Saharan Africa. So that tells you a little bit about the income distribution. The other thing I would caution is even though GDP per capita might be approaching roughly $2,000 per capita, this is highly skewed. And so I always get worried when people use averages like per capita for big countries like India, because I could ask you to stand here on stage and I could put your left foot in a bucket of ice water and on your right foot in a bucket of boiling water. And on average, you will be comfortable. Okay, so this per capita stuff doesn't make sense to me, right? Because on average, I don't know what it means. 1% can afford anything. 99% have trouble. So you asked also about where the money will go once you do have a middle class. It'll probably go to the public services that are provided in other countries by public offerings. Education, as you indicated. By the way, I think that's the future for India. If India can upskill its labor such that you have a population that's literate and that can actually take on higher value-added sort of tasks, that will be the opportunity that can help India to develop the middle class. But most of India is earning, single-digit dollars per year.
If I may just, add a little bit here. This realization that you need to help the bottom 50% is very much there with the government. One of the schemes that the government put in place was the Prime Minister Jandhan Yojana, which is basically one bank account per family. It was executed in project mode. And when we opened these accounts, and our bank alone had 110 million of those accounts, they were 97% zero balance. Today, if you see the last quarterly report of the bank, only 14% are zero balance. And the amount of balance in each, on an average, is 1,600 rupees. However,
on average.
However, these are 110 crores of accounts of the same class of people. Okay? Not of the upper and the lower. These are people who had no accounts earlier. So same class of people. So I would say on an average over here makes sense. And if you look at the amount of money that is there in those accounts now, of which from 97 it's become 14%, it's as much as 21,000 crores. That is $3.5 billion. So these were people who never had accounts earlier. So today they are beginning to create a credit history and they're beginning to leverage on these. We are able to sell them small value insurance products. We are beginning to look at overdrafts against these. So, this is the way that we have to scale up the bottom people in order to come up to a place where they can actually, start spending. One other very small anecdote.
I'm sensing a bit of a fight brewing here. But I'd like to see who has the next question. Can I have this second row here? Right down the front. Number 4, please.
Good morning. Fascinating discussion. 2 questions which are interrelated. When I hear about the UAE, I see a strong narrative for investments, whether it's Dubai-based or Abu Dhabi story. But when I hear about India, I still grapple with the narrative. What is the investment narrative? And as part of a narrative, you mentioned China. Where does India fit in the One Belt, One Road policy? Thank you.
I think on the narrative, I think BV can take that question.
Sure, on the policy, I think
on the
Vikram
One
spent
Belt,
time
One Road, I
speaking
think Vikram is well
Absolutely.
placed.
I'm happy to.
So on the narrative, the way we look at it is obviously, again, it goes down to specifics, right? When you talk about investment themes, for example, if you think about healthcare services, it's a substantial opportunity. It's a extremely fragmented market for hospitals, just as a simple example, diagnostic centers, and so on and so forth. So there are pieces in the economy, education, to Vikram's point, a huge opportunity because there's a need for substantial education, K through 12, postgrad, everything. So therefore, there are pockets of opportunities like this on the one side. On the other side, similarly, trying to build consumer-related brands. It could be across multiple retail segments, consumer goods, so on and so forth. Again, these are fantastic opportunities in the long run. Obviously, if you look at it at the high level, the investment themes are attractive. Question is, what valuations do they come at? And second is, what are the levers that you can use to potentially improve a business to make it more efficient? Those are the 2 main questions. If you look at it in the context of the public markets, all the sectors that I just mentioned are all expensive at the margin. Right? So for example, if you go by the biggest hospital chain in India, it's just got 10,000 to 12,000 beds. It's a tiny hospital, but that's the largest hospital. And it'll trade at 25 times EBITDA. So it doesn't make sense from a valuation perspective. But instead, the other opportunity in healthcare, which is what we've done, is create a private platform where we've got 2 hospitals which were distressed, now turning around. We'll buy a few more hospitals, bolt them on, and create a scaled platform and deploy resources who can make it more productive. So the investment narrative, therefore, for us is look at the macro where the demand side of the equation is very clear and easily available. Make sure that you can supply that product at a price point which is very attractive by working on the underlying business.
And then One Belt, One Road.
Yeah, so One Belt, One Road, I think, was seen by India slightly as a threat, right? I mean, it's coming around India. There's $50 billion the Chinese are investing. I know there's a panel after this, so I don't want to spend too much time. But, $50 billion in the China-Pakistan economic corridor, creating a loop here, sort of encircling. I think it raises a whole bunch of geopolitical concerns. It's probably, honestly, too much to get into, given that we're running out of time here. And I think the next panel will probably address some of that.
Okay, and I think I have to wrap things up there. It's a shame because we could have talked all day, but yes. I do have to thank our panelists for sharing their insights. Vikram, Arundhati, BVK. Thank you.
Thank you.
Thank you.